Hello friends, you're watching Tax Dosti videos. I'm your tax dost and tax host, Advocate Anthony Williams. The question we will be answering is, what is foreign source income in Pakistan for a resident person? Meaning that if you are in Pakistan from July to June in any tax year and you are in Pakistan for more than 183 days, so how will what income will be foreign source income and what income will be Pakistan source income? So this is a very important question because normally consultants do this, that any amount of money coming from outside, they put it here in foreign source, as you can see on the screen, foreign source, and they try to put it in one of these um, sections, which is wrong because you have to see the substance of the transaction. So foreign source income has specific meaning. I'm referring to section 101 of Income Tax Ordinance 2001. And when you fill your tax return, and this foreign source income is normally shown in normal tax returns and corporate and AOP. It's not in the salaried person tax return. So in the foreign source income, if the first one is foreign property income, what income from property or rental income is foreign source? All the income that you receive from such properties which are located outside of Pakistan are considered as foreign property income. So if you have one, two, three, you can put here the net amount of foreign income. And that amount is definitely coming from outside of Pakistan, and we're talking about a resident person, not a non-resident person. So any income, if a person earns from a property that is located, immovable property that is located outside of Pakistan, that will come here. And if he or she is earning any income from property located in Pakistan, it will come here, which is the normal property head or income from property, or what we call rental income. Similarly, the next, foreign business income. Which businesses or which income from business will be recorded here? All those businesses that are being carried out outside of Pakistan, meaning your supply chain is out of Pakistan, your employees are out of Pakistan, and most of your work is done outside of Pakistan. So any resident person who has a business, for example, if you have a restaurant in France, income coming from that restaurant is definitely a foreign business income, and it will be shown here. And these are all net figures, meaning all the deductions. After all the deductions, you will show the net amount of foreign income received. Moving on, basically you can see clearly that foreign source doesn't mean that the amount is coming from outside. A few conditions for every head of income have to be completed. Just as for rental, any income that you are doing in Pakistan but your customer is outside will not come here in foreign income. It will come here in the regular business account, income from business, under the income from business head. A reason being that most of your supply chain is in Pakistan and the business is being carried out in Pakistan, and it is not foreign source. The only thing is that your customers are outside of Pakistan, and that is the mistake that most of the consultants make. Just because the money have come, they put it here in their clients' foreign, in their tax return, foreign source and foreign business income, which makes a lot of problems for the clients. So remember, if your supply chain and your employees and most of the resources you use, like a restaurant, or even if you're a service provider, if you're an accountant, you're working here, so you're working in Pakistan and all the resources are being used to provide services, and you are exporting your services. So export of services like textile, like accountant, like IT freelancers, all these are regular businesses in Pakistan. They may not have any local customer. They may be 100% export oriented, but the business according to tax law is being carried in Pakistan, and it will come here. And similarly, if you have a software house outside of Pakistan, all employees are working there, though they are remotely working, and you are paying taxes there, you have rented places and other business expenses. So that definitely is a foreign source income, and it will come here on net basis. And you can see you can have multiple businesses here. Going forward, foreign capital gains is just like foreign property income, any property that you sell, but this also includes immovable and movable, meaning if you sell your home, or if you sell your car, or if you sell anything outside of Pakistan and you make capital gains, so a resident person has to show that as foreign source income, and it will come under foreign capital gains here, the income. And if it is situated, that capital asset is situated in Pakistan, then it will come here. So the logic is that you have to see where the capital asset is situated and how it is sold. And there are definitely different implications for this. Even some assets that are outside of Pakistan, but law considers them to be sold in Pakistan. So you have to check your consultant, your local lawyer, before you decide. But as a general rule, you can see this. And the last, income from other sources include dividend income, rental income, other income. So if the dividend is paid by a foreign company and you receive the money in Pakistan, it is a foreign source income. So this was all about foreign source income. And the purpose of this video was to make it clear that just because the money is coming from outside, or the customer is outside, and in some cases even if the asset is outside, it doesn't mean that it's automatically foreign source income. And there is a great difference between foreign source income and foreign remittance made by family members. Foreign remittance made by clients will definitely will come under the business head, and foreign remittance made by family members will not come. Neither it will be income from other sources, neither it will be foreign source. It will be directly go into your wealth statement as a resident person. And then again, we were talking about a resident person. For non-resident person, there are separate rules, and hopefully we'll make a separate video. But for a non-resident, there can be no foreign source income shown in Pakistani tax law, because Pakistani tax law does not apply to other countries, and similarly other countries laws don't apply to Pakistani jurisdiction. I'm your tax host and tax dost, Advocate Anthony Williams. See you in the next video. Thank you very much.